Not resilient.
When they write press releases,
good resilience.
You go with resilience.
Was it cognac, David? Was it wine and spirit? Was it fashion? What was it? Oh, I see. It was selective retailing at -1.
It wasn't great. Yeah, it wasn't great.
Yeah. Wow. But he's so rich, I guess.
When you're rich, you can say year over year in the fourth quarter, 5% year-over-year decline in the first quarter of 25. Greater contraction in Chinese demand worldwide. Not a big surprise, but also the Chinese going to Japan where they were buying a lot of things, and that slowed as well. Spend by U.S. nationals also softened sequentially, but only moderately in the first quarter. I'm reading here from a Morgan Stanley note as well. But generally across the board, not a great quarter for LVMH.
No.
Despite their use of the word resilient.
Right.
I did go into the LVMH store. It's their temporary store on 57th Street. It was very crowded, but it's hard to know how many people are in there just looking at it because it's beautiful, like a museum. I did see somebody with a little dog. They were buying their dog a dog collar.
Well, that just shows you everything.
Yeah, it does. They had their dog on the counter. They were fitting it for the dog collar. Thought that was interesting.
How about Louis Vuitton kicked off the season in Melbourne, designing a custom trophy case to mark the occasion? Now, there you go. That's what I want. What's the occasion per share? This was terrible.
By the way, wine and spirits, which you've been talking about a lot. I mean, it was down.
Because wine and spirits terrible. They have cognac, which is one of the absolute worst to have.
Yeah.
You have to have agave spirit. It's the only one that had growth, 6% growth.
It was down 8%.
The browns are down so badly, it's like, don't even think about it.
And this is before tariffs, right?
Before tariffs. David, I got to tell you, this was a juggernaut in good and bad times. No. Good,
there is
shows
European
no
wine
resilience.
And spirits as well.
Oh, what you got there?
Huh. Interesting little story.
That's new.
Well, I'm going to look at it first and determine whether it's worthy of discussion.
Okay.
Give me a second.
Alcohol, Carl, has turned into a nightmare for everybody. And it's whether it's GLP-1s, whether it's healthy, whether it's just cannabis, they're in 100% denial. They're in denial to the point when you speak to them, it's like, no, it's a cyclical business. What? Cyclical what? You used to drink more when you're down. It's not cyclical.
Yeah.
It's secular.
You mentioned GLP-1s, and also you mentioned this downgrade of Pepsi today over at B of A. They go from 185 down to 155. It's all about Frito-Lay North America in their view, Jim.
Yeah, look, I think that talk about not healthy. Potato chips are just, they resonate in the not healthy category. There's also, I should say that McCormick's potato chips weren't as bad. And there is a company called Utz that I keep thinking was going to get takeover, but that was ill-advised and misinformed.
Speaking of all this, ACI, Jim, down 7, despite the beat, and I guess you'd call it a cautious guide.
Well, look, they had this terrible thing. That stock actually did move up after the Kroger, but Kroger's been terrific versus a. You notice, David, that Kroger was like this, and Albertsons was.
Yes, I have noticed that.
What do you make of that? We should put up a chart of Kroger, which is just
there
incredible.
You got it right there.
Yeah.
Yeah.
Seen Rod Daniel?
I have not. We still don't know. We never found out. I was sure we would ultimately find out why Mr. McMullen left the company immediately, even though it was not related to specifics having to do with the business, and we've yet to determine that. I think maybe he knows, not telling us. Look at that. Do you ever see him not say anything?
That would be news, Jim.
Look,
you're going to hold back some news?
Can't get it confirmed.
Can't get it confirmed. Good for you. Don't go with it. All right, I can't get this confirmed either, but I'm going to go with it because Reuters is reporting it and the stock's up. Hewlett-Packard Enterprises, they say Elliott's taken about $1.5 billion stake in HPE. Elliott, of course, as our viewers well know, the most active of activist investors, but not always. Not always.
Man, that thing is one-way ticket.
I don't have any insight beyond this Reuters story.
Antonio Neri is an incredibly nice guy, but
pointing out that HPE, that Elliott has taken that.
Who's their number one competitor?
More than $1.5 billion. So make them one of the largest.
We'll quiz.
Say again?
Number one competitor, HPE.
Number one competitor.
Who's the most competitive person in business? Hates to lose, loves to win.
I don't know. There's so many.
Owns Austin.
Michael Dell.
Yes.
Yeah, well, of course.
Well, you were not a fan of this last quarter.
No, the last quarter was really horrible. Yeah. And I saw Mr. Neri out at GTC, and I felt terrible because I was talking to, he had one of these things that was a robot that was him, and I wanted to ask him how come the quarter was bad, but it seemed inappropriate.
Oh, it's Bloomberg, sorry.
But I have to tell you that this company is sorely behind Michael Dell's company, and you have to hope that they come back because it's a storied company. And Mr. Neri's a good guy.
I want to correct. I said Reuters, Bloomberg story.
What do they want? Do they want board seats? Do they want?
No, it's not. I don't know. I have not gotten any insight on this. Obviously, I've been following Elliott in any number of areas.
What do you think about Phillips? What do you think
Phillips
about
66 is another one where they're engaged.
How you feel about that?
I have, I'd like to do more reporting on it because there is a lot of back and forth there in terms of their director that went on the board for them is now opposed to them, but they have their own slate, what they want. At some point, we'll hit. There's been a lot of other stuff going on that activism has not taken precedence for me lately, as I think you might imagine.
Well, yeah, I mean, you can't fight the trend. Oil is just going down and down.
It is.
And I think that I had Rusty Brazil on last night as my expert. More likely 50 than 70. There's just nothing happening. That pricing is just going to continue to get weak.
So that's nice on the inflation front.
Well, it's great, except if you're trying to buy 5.5-inch pipe steel drills or steel pipes for drilling, right, Jim? I mean, the break even is getting challenging, is it not?
Yes, it is. Yes, it is. I just feel that the oil companies are not hearing the clarion call from Washington to drill more. And the open fields that the White House opened, good at 70, good at 80,
right?
Not good
like
here.
Anwar, they don't want to.
No, they don't. No, Anwar, they don't. Well, those guys spent the last 10 years getting good about the environment. Like Coterra pays you more if you cut down emissions. Is that something that's not going to be allowed?
You can't cut down emissions. You have to increase emissions. We want only if you increase emissions.
Well, look, Cole's back.
By the way,
Cole's back.
I don't want you to capture carbon. I want you to let it go.
I think anthracite
Free the
should come
carbon.
back.
Free it.
How about anthracite? Killed more people than tobacco. Let's bring that back.
Anthracite.
Anthracite, that great form of coal.
It's not used for steel.
Pennsylvania.
Yeah,
Pennsylvania.
It's Pennsylvania. It's used for a lot of
Just
steel
kidding.
making.
By
the way, I think
there is such a thing as clean coal.
to Carl's point
there is
on
such
the
a thing as
pipes,
clean
I
coal.
think the number of people employed in manufacturing that uses steel and aluminum is 60-fold the number of people actually employed in those industries.
It's one of the smallest industries in the world, but
Yeah.
that's okay. It's a visible industry.
It is, and it does tend toward national security. That said, the workforce is 60-fold that relies on it that conceivably will be
let me
hurt.
give you the opposite. Nucor, every time they open a plant, is responsible for about 8 new jobs besides the plant.
Right.
That's what's so great about a steel plant. Just puts so many. And Nucor, by the way, only puts plants where they actually are like desperate for more employees. The president should call Nucor and bring them in to say.
He has actually called out Nucor a couple of times in a positive way.
Yes, he
in
has.
his conversations.
Because
so it is in his.
But you get Caterpillar, you get Nucor in a room, and you just have like a bonanza of positivity. It's time for some positivity out of the White House. You know, and you get Navarro in, and I don't know, you have something that Navarro wants. I don't know. Something.
Well, Besant yesterday did say that we're not near a break the glass moment. He said that the Fed has a lot of tools in the toolkit, right? Talked about the VIX potentially peaking. Wouldn't rule out delisting Chinese stocks. That was interesting.
Yeah, I told you they should delist them.
You've been saying that for years.
The break the glass moment could have been a marriage full. I know.
You've been saying that for years.
But yes, the Chinese listing of the companies are almost all bad. I wish Hindenburg were still around. They have a good opinion of the Chinese companies, and they just are traps. They're just roach motels, and people. I don't know. There's Alibaba. That's a good one, as David Tepper would tell you. He likes all of them, but there's a couple good ones. Baidu's good. Alibaba's good, but then all the stuff that they introduce.
There's a giant private company called ByteDance that is obviously not public. That's one of the largest in the world.
Well, when
TikTok.
you want
By the way, the whole TikTok thing has sort of been deferred, delayed.
If you want to launch a product, you launch it on TikTok. You forget linear.
You can
Does linear know how linear is doing versus TikTok?
Now.
There's some good ones.
Linear is a great business, my friend. Don't you despair. It's a great.
People are
business.
watching it right now.
They're watching it right now. And we run an ad.
Really?
Yeah. Then we run an ad for getting a mortgage or your house.
David, why don't you just go cancel your
have.
damn life insurance already? Trade it in. Get yourself a new car.
Speaking of ads, we're going to watch one in a second. But first, let's check bonds today. Empire was a little better than expected, down 8, looking for down 13. But overall, it's come down some 40 points in the last few months. We're going to get Barkin and Lisa Cook today, 10-year 436. Stay with us.
That's what it is, Coventry, right?
now.
A lot of worry circulating around foreign tourism to the U.S. this year, although airlines having a nice open at least. Delta, Southwest, United, American, Alaska, all up 3 to 4%. We'll keep an eye on that as most sectors, in fact, all sectors now, are green. Financials helping to lead the charge up more than 1%. We'll get Stop Trading with Jim in a minute.
I think that what
Asset.com.
I don't want to speculate. I want the process to play out. But any countries of interest around national security, I think you're going to land in an assessment that concludes you to believe that it's mostly generic products, generic pharmaceuticals that are coming in, which, by the way, 90% of prescription drugs today in the U.S. are generic, right? The other thing that might be are precursor materials. So those chemicals such as hydrochloric acid, magnesium, that help synthesize the therapeutics that we make.
Let's get Stop Trading with Jim.
Yeah, I want to recommend J&J today. That was Joe Walk Squawk. He was absolutely sensational. And we left out that there were so many good things. But one thing is they do have the most domestic manufacturing. So if you do believe there'll be a hit, they're not going to get the hit proportionally. They actually raised, encouraged the sell side to increase for big pharma indications the middle years. And I recall, for instance, Spravato, which is something they use for depression that turned out to be, it wasn't an afterthought, but it was small. It's turned out to be very, very big. They've got some very good things for Crohn's disease. And I would point out that J&J is still one of the great premier developers of fantastic drugs. It sells at 14 times earnings. I believe that its talc problems are now behind it because they're going to take them one by one. They've only lost one case. What a great opportunity to buy a great American company.
He did say that the best way to incentivize manufacturing of pharma and medical devices is tax. not tariffs.
Yes.
Tax
And,
policy.
Yeah, look, I mean, Joe's is, again, I want them, the White House, to come in and you take a guy like Joe. I mean, Joe has just seen everything. He knows everything. He's really smart. He's an American guy who wants to do what's right. And he will tell you, look, I think this is good, but I just feel there's too much by fiat and not enough by bringing in the really great people in this country who are amazing citizens and have thought through all this stuff and are ready. And do it for free, man. This guy's a real deal, Joe.
Right.
Everyone here would like him. You'd say, wow, I learned a lot from that guy. That interview this morning was sensational. Glad he came on the set.
That's awesome. Jim, we'll see you tonight. Mad Money,
Absolutely.
6 p.m. Eastern Time. Steady open. Dow's up almost 200. When we come back, Brian Moynihan of B of A. Stay with us.
Good Tuesday morning and welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber. We are live as always from Post 9 of the New York Stock Exchange. How are we doing with stocks? Not too shabby this Tuesday morning so far. The S&P 500 up a little more than 0.5%. The NASDAQ up 0.6. So tech is leading the charge. The Dow is up 172 points. Only group that's lower right now is healthcare. Everybody else up. Financials are best performers right now. We've got some more bank earnings to get through. Energy is also coming back strong, up more than 1% as a sector. Take a look at Treasuries, source of the drama last week. Things have calmed down, at least yesterday. Today, we're seeing slightly higher yields, 4.37 on the 10-year, 2-year elevated at 3.85. We are 30 minutes here into the trading session. Here are three big movers we're watching. More results out of banks, as mentioned. Bank of America and Citi reporting. Bank of America CEO Brian Moynihan calling out a resilient consumer in the release. He's going to join us this hour in a First on CNBC interview you do not want to miss. We're going to dive a lot deeper into what they are seeing. Johnson & Johnson topping earnings estimates, boosting their outlook. Not helping the stock, though, which is down a little more than 1%. We're going to break those numbers for you in a moment. And then HPE shares are surging. Elliott Management taking a $1 billion stake in HPE. That's according to a source familiar with the matter. Stock's down more than 25% year to date. But guys, wanted to dive into inflation today because it was a quite a quiet data release. We did get import prices, and that's very much in focus because A, it's an inflationary input, and B, a lot of people think they're going to surge because of the tariffs, obviously. It's what we pay on imports coming in. We got a really good surprise there as far as lower inflation, a negative number, negative 0.1. This is, of course, was taken in early March before the tariffs started coming in, but I think it's more proof that heading into this tariff wave we're seeing, inflation has looked good, down. When I say good, I mean weaker. If you take out energy, because we know energy, petroleum was a weight on prices during the month, it still was pretty flat. 0.1% increase in import prices. I say it also because it's the third piece of evidence we've seen, CPI, PPI, and now import prices, that the setup into tariffs is one of lower inflation. And that's good because one of the worries was that we were going into this tariff environment at a high point of inflation or a phase where inflation was starting to pick up. Not seeing evidence of that, so that's a good thing. The question is, what now? And I'll just show you one chart from the Bank of America Fund Manager survey that they put out, which was very bearish overall on the economy, on stock exposure. This is the fund managers expecting higher global inflation in blue. You can see the spike there on the back of the tariff announcements. And then the percentage of those fund managers, Carl, that expect short-term rates to be higher, that's not going anywhere because that comes along with expectations of a weaker economy. So far it's in the surveys, right? University of Michigan, consumer confidence, fund managers, everyone's expecting higher inflation. We haven't seen it yet, but we also haven't really started to see the impact of the tariffs.
Yeah, I think it's the fifth most bearish B of A survey in about a quarter century. Interestingly, the expectations for a hard landing were 11% last month, and it goes from 11 to 49% in 1 month.
Yeah, no surprise there. People are getting more worried about the economic outlook. I think it was 82% of respondents expect global growth to weaken. No surprise. But I just wanted to stick with inflation because the expectations for the Fed are moving around a lot. So I think it's worth diving into today. First of all, New York Fed also does an inflation survey that was out yesterday. In case you missed it, 1 year expectations rising to 3.6% in March. That's a bump up from 3.1%. It's not like the bump we've seen in University of Michigan, for instance, in terms of inflation expectations, but it's worth watching. And then on the good news front, the market, if you look at some of these swaps markets, five-year inflation expectations, not too worried about inflation. I mean, if you look at the market and even 1 year swap, here's five-year. You see the spike in 2022, right? Remember that inflationary period we went through? It's actually been trending lower lately. And you see that in the short-term 1 year chart as well. Gauge of how markets are perceiving tariffs affecting prices, it's actually fallen sharply. So there could be something to this, on again, off again tariff strategy that President Trump is employing now, where exemptions, delays, where maybe it isn't persistent inflation, it's just sort of one-off shocks. That's certainly something that Fed Governor Waller talked about yesterday. I thought this quote was really interesting. He said, "I can hear the howls already." He was talking about cutting interest rates, right? That this must be a mistake given what happened in 2001 and 2022. But just because it didn't work out once does not mean you should never think that way again. When he's talking about sort of missing the boat on inflation being higher than they originally thought, he used a tush push, which I had to, go deep on this morning to understand. I grokked why it's so controversial, but I think his metaphor was basically like, I'm going to stick with transitory on tariffs and worry more about growth expectations. He's definitely representative of the dovish camp, and he's been a thought leader before.
Yeah, I mean, remember when he was calling for 4 cuts this year?
He did it with us on the show.
Yeah.
And I think that so right now, where's the market? Market's at first cut in June about an 88% chance, and that we'll get 3 this year. And I think that's more in the Waller view than in the, say, Bostic view we also heard from in the last 24 hours, which was more of a wait and see. We've got to see what happens with inflation. We've got to see what happens with the economy. The specific place that the economy lands depends critically on the details of where policy lands. And because we don't know that now, again, that's another reason why I feel like moving too boldly with our policy in any direction wouldn't be prudent at the moment. Are we going to get a Q2 cut like the market expects? We'll see. It depends whether the Fed is worried more about growth, I think, than inflation at this point.
Meantime, major averages trying for a third straight day of gains here, despite the tariff turmoil. Our next guest says there are reasons to stay overweight on U.S. Her portfolio favorites include some large cap value and mid cap growth names. Lisa Shallett joins us this morning, Morgan Stanley Wealth Management CIO. Lisa, welcome back. It's good to have you again.
Great to see you, Carl.
Got some relief in the benchmark yield. VIX has come off the boil. Is there a growing sense that maybe we have recalibrated here and can afford to breathe a little easier?
I do think we've recalibrated a little bit, and certainly we repriced risk a bit, and the technicals got profoundly oversold, right? So I think that some of the price action and the repositioning that we're seeing in the market, where some of the biggest laggards over the last week are now leading. You mentioned, tech and financials, for example, and I think the market is behaving in the ultra short term in a very rational manner.
Where do you think we stand on earnings revisions? I think the Citi earnings revisions index is negative territory for 17 straight weeks. Are we pricing this in on the earnings front?
We're almost there. I mean, most recently, my colleague Mike Wilson over at MS&Co Research, cut his numbers yesterday. He was one of the holdouts. He's come down from 270 for this year down to 257 next year. He had been at 303, now looking for something closer to 281. If you look at a blend on that, that's still about 270. So at these levels, this market is still selling at a forward PE of, more than 20 times. So, what we've said to people is, don't get too far over your skis. Yes, we've had some repricing. Yes, there are some opportunistic bargains out there that you can reload on. But, let's not forget the context. And the context is that these earnings estimates are coming down, that economic growth is likely to slow. Again, our base case is soft landing, but barely so. We continue to believe that the volatility, does make those recession risks at about 40%. And so, this is not the time, to call the quote unquote all clear, especially with bond market volatility remaining elevated as well.
Yeah, speaking of which, it was only a week ago, Lisa, we were very much focused on the bond market for obvious reasons. Things have calmed. I think 30-year swap spreads right now have calmed down a great deal as well. But we do have a lot of auctions coming up, May in particular. How focused are you going to be on our ability to refinance and do so in a calm market, so to speak?
I'm very concerned. I'm in the camp that says that the bond vigilantes are watching very, very closely here. They're looking at global currency market dynamics. They're looking at the news coming out of the United States Congress on the direction on budgets and the potential size of the deficits. And so, I fundamentally believe we're not at all out of the woods. This is a U.S. Treasury market, I think, that's getting buffeted around, not just by, technicals like the unwind of hedge fund basis trades that I know, Treasury Secretary Besant, has been opining on. But fundamentally, I do think that there are counterparties around the world looking at what is, the right level of cost of capital to be carrying or to demand for long duration U.S. Treasuries.
Well, I guess that's a to be continued on what we see in the price action, little higher yields. My question, Lisa, in the equity market is, what do you do if you're in tariff exposed names? I'm looking at the underperformance of healthcare, for instance, pharmaceuticals next in the crosshairs, right? When it comes to tariffs, there's the semiconductors, which have gone back and forth. There's retail, which now gets hurt on the China story. How do you deal with that new risk in your portfolio if you own those groups?
Yes. Look, I think that this has, been an extraordinarily, painful set of days, since Liberation Day, quote unquote. But I think if we've learned anything, if investors have learned anything, it's that you cannot count on anything as being permanent here. And so, our strategy has been look for that fundamental value, try to understand where are the players here who have very strong market positions, high market shares, can command the pricing power that may be necessary in the event that some of these tariffs hold, and focus on those higher quality names. But we still do very much like the healthcare sector. It is an area that we're looking for some of our stock picking, and that kind of complements our highest conviction area, which has been financials.
That's some good stuff, Lisa. Nice corollary to what we got from Mike yesterday on Squawk. Appreciate it very much, as always, Lisa
Absolutely.
Shallot. As we go to break, look at our roadmap for the rest of the hour. Boeing, as you may know by now, reportedly the latest name caught up in the trade war with China. We'll talk about what's at stake for the plane maker.
Plus, LVMH shares, they're on track for what could be the worst day that stock has seen in 5 years. We'll tell you what is driving those declines later in the hour.
And on the flip side, Bank of America up more than 4.25%. An interview you do not want to miss. Chairman and CEO Brian Moynihan breaking down his latest results, the recent market volatility, and more. We've got a big show still ahead for you. Squawk on the Street. We'll be right back.
Shares of Boeing under a bit of pressure this morning. Reports the company is the latest name getting caught in the crosshairs of the trade war with China. Phil LeBeau has the story for us. Phil.
David, we're still waiting to see if the state government in China issue some kind of a formal statement, because at this point, this is just a report that is out there. It has not been confirmed. Boeing is issuing no comment. So it's unclear whether or not this edict has actually been handed down, and we will see a pause in terms of deliveries and orders. The implication here, that's not going to be huge near term, but there's certainly implications longer term. Remainder of this year, Boeing is expected to deliver 29 aircraft to China. That's about 6% of their expected remaining deliveries in 2025, according to Jeffries and Cirium. And through 2030, they're expected to deliver about 186 aircraft to China. That's about 5% of the expected deliveries through 2030. We say expected here because it's still unclear if something is going to change in terms of 737 MAX monthly production. Their deliveries this year, 18 so far, and they do have a number that are in queue to be delivered relatively soon, pending whether or not China says go ahead with those deliveries. And remember, it is the state government that makes the final decision in terms of whether a Chinese airline can take delivery of those aircraft. What may be of greater concern for Boeing investors are the comments from Ryanair CEO Michael O'Leary. He told the FT this morning that it may decide not to take delivery of certain aircraft from Boeing if there's a tariff in place. And you can see why, guys, why an airline like Ryanair or any other international airline might sit there and say, now, wait a second, you're going to tack on how many millions to this particular 737 or 787 that we have to take delivery of because of a tariff that's been put in place by the United States government. All of this comes as we wait for Boeing's Q1 results, which we will get next week, and the implications that will be spelled out by CEO Kelly Ortberg in terms of how the company is managing not only the tariffs that are being put in place, guys, but also how the customers are reacting to those tariffs. Because there may be a number of airlines around the world who will sit there and say, we're good. We'll fly what we fly until this tariff issue gets straightened out.
Hey, Phil, we had a discussion with Jim this morning about the backlog, and the question came up. Generally, if a customer declines a delivery, how easy is it for Boeing to find another buyer for that aircraft?
Generally, they can find it, but you have to. It's not like you have one sitting there and a customer says, we don't want that, because you've got the livery, you've got the interiors. Everything's been customized for that particular airline to take delivery of that particular aircraft. So if it's further out, you can make some adjustments and say, okay, we're going to reroute a 737 MAX that was headed to this airline. We're going to go to this airline instead because Airline A has said we're going to hold off on the delivery. That happens all the time. If it's near term, once the livery is in and it's been customized with the seats that that airline wants, it's not good. It has some implications there in terms of near-term delivery numbers.
Phil, do we know what percentage of parts in these jets comes from somewhere else and conceivably is going to be subject to a tariff on our borders?
Right. A very high percentage of the sourcing is in the United States or USMCA. And that brings up the whole question, David, of what are the exceptions when it comes to USMCA for aircraft parts. But Boeing, relative to the production in the United States, a high percentage is content from the United States, from suppliers in the United States or in North America.
Phil, thank you. Really good explanation of a complex issue. Digging into the order cycle. Phil LeBeau on Boeing today. When we come back, are tariffs on pharmaceuticals coming soon? What a new probe of drug imports could mean for that group. As we've rapidly come off the session highs, we were up 200 on the Dow, now down 24. Don't go away.
now.
Farm is in focus today as the Trump administration announces this new probe into imports from the group. Plus, we got results out of J&J. Our Angelica Peoples has been tracking all that action. Morning, Angelica.
Morning, Carl. Johnson & Johnson beating on the top and bottom line in the first quarter thanks to its pharma portfolio, raising its full-year sales outlook by almost $2 billion to include Caplyta. That's a drug for bipolar disorder that J&J got through its recent acquisition of Intra-Cellular. So that sales guidance of $91.4 billion for the year includes $400 million in tariff costs, almost entirely on the medical device side. Remember, MedTech represents about one-third of J&J's sales, and J&J CFO Joe Wolk telling me that tariffs will be felt broadly across the MedTech portfolio. It's not just one product or specific segment. But the biggest impact at this point is actually products of U.S. origin being shipped into China. And that guidance does not include potential tariffs on pharmaceuticals. Carl, you mentioned that probe that the Trump administration disclosed yesterday, and this kickstarts the process to impose tariffs on medicines. And J&J's Wolk says that the company was expecting this, and it's been trying to explain to the administration that you can't just move pharma production in a matter of weeks or months. But J&J is already planning to produce more pharmaceuticals in the U.S. Like other pharma companies, J&J has started building more manufacturing facilities in the U.S. since those 2017 tax cuts. J&J CEO Joaquin Duato on the call today saying that the most effective answer to increase pharma and medtech manufacturing in the U.S. is tax policy, not tariffs. And you've seen J&J, Lilly, Merck, Novartis all touting those investments in the last few months. And I'm sure we'll see more of that because now we have a 3-week public comment period where the industry has a chance to make its case against those tariffs. Sarah?
That's going to dominate the earnings for all of them. Thank you very much, Angelica.
Thank you.
Speaking of earnings, Bank of America shares gaining after strong results there. Deposit balances, loan leases, and net interest income all up from last year. We're going to break it all down with Chairman and CEO Brian Moynihan when we come right back.
Get a check on stocks this morning about an hour into trading. Definitely a little bit muddier than it was at the open. We are definitely off the highs. Sectors have gotten a little more complicated. Several have gone red, including consumer discretionary and healthcare. Bonds, in the meantime, have remained fairly friendly. We're keeping a close eye on the benchmark yield, which is right now about 4.36. Let's get a news update this morning with Silvana Hanau. Hey, Silvana.
Hey, Carl. Good morning to you. Jury selection is set to begin this morning in the retrial of disgraced movie mogul Harvey Weinstein. Now, New York Tops Court overturned his previous sex crimes conviction last year. It concluded the judge improperly allowed testimony from witnesses who said Weinstein assaulted them but were not part of the charges. The House Committee on Oversight and Government Reform wants to hear from the co-founder of 23andMe amid the company's bankruptcy proceedings. Now, there is growing concern over the risk of genetic data being transferred to potential buyers. 23andMe filed for bankruptcy protection last month as it struggled with weak demand for its ancestry testing kits. And American Airlines plans to join its competitors by offering free in-flight Wi-Fi. The complimentary service will be sponsored by AT&T and should be available for loyalty members in 2026. The addition follows similar moves from Delta, JetBlue, and United, Sarah.
All right, let's go. Free Wi-Fi in the skies. Thank you, Silvana. Yeah. Bank of America topping Wall Street estimates on net interest income and trading revenue in particular. The stock is rising about 3.25% now this morning. Brian Moynihan, Bank of America Chair and CEO, joins us first on CNBC. Welcome, Brian. It's great to have you.
It's good to be here, Sarah. How are you doing?
I'm doing okay, trying to figure out what to read into all of this. I mean, you put up a good quarter, especially on, the trading like other banks and net interest income. How much should we read into this healthy snapshot, given the enormous uncertainty we face about what comes next?
Well, I think, Sarah, as we laid out in our earnings presentation to the analysts just a short time ago, we basically laid out our first quarter 2025 results, which was 18% EPS growth, revenue growth, modest expense growth, good credit quality, delinquencies down, charge-offs down, et cetera, and loan growth and deposit growth, showing that the economy is still growing and our consumers are still spending. But on the other hand, we said, here's how we're positioned if any of these things that we all are talking about and you're talking about every day could come true. Differences in policies across multiple dimensions, what that could do to affect business spending and capital formation. And all those things are out there. But in the current environment, we try to draw a bright line saying, hey, the first quarter of 25 was another good quarter for Bank of America.
How much has the trade war impacted the results so far? And if not, when do you expect it to do so?
Well, I think the tariffs and trade haven't impacted our results in the near term because, remember, it was April 2nd, so there were modest tariffs before then. I think what you're seeing is our economists at Bank of America Securities, as well as economists around the street, are lowering their growth expectations and increasing their expectation that there could be a recession up from 20% to 40% or whatever the numbers are. And are increasing unemployment levels up a bit. And as you look at all that, how a bank thinks about that, that goes through our reserving methodology for our loan book. And what we told people is if you take our reserves and our imprecision reserves, our judgmental reserves, and all the conservatives we throw in, we're sort of reserved at a 6% implied unemployment rate, which is far where we are now and above where most people think it will get. So the banks have done a lot, and our bank has done a lot to position ourselves with capital, liquidity, credit quality, multifarious portfolios and for times of stress of which we haven't really seen other than the pandemic for a long time, and we're prepared for that. And yet you're not seeing it reflected in the current numbers. You're reflected more in how we're thinking about credit and provisions going forward.
What do you hear, Brian, from the CEOs you talk to, so many, small, medium, large, about investment and hiring plans given the new tariffs?
Well, I think it's not the tariffs are one aspect of it. You have the immigration policy and the ability to get workers. You have the tariffs. You have the tax bill, which is moving through Congress. There'll be a lot of discussion as it moves towards a final resolution between the two plans and ultimately what they'll get through. And then you've got the deregulation impact across all industries. And I think each of those are hard to figure out, and all of them together all moving at once are even harder to figure out. So the new administration came in with ready to go compared to the first Trump administration. They put a lot of stuff on the table. They're pursuing all that. And while we talk a lot about tariffs, all these other aspects are going on too. And the average business owner is trying to figure it out. And that's causing them probably to be a little slower in making decisions on hiring or capital investment until they figure out the path forward. Now, in a company like ours, we've got, tens and hundreds of people who spend all their time thinking about that. We've got a research team, which is a great team that spends all their time thinking about that. But if I saw a lot of mid-sized companies and smaller companies last week. If I were one of them, I'm sitting there saying this is hard to figure out. So they're being a little more conservative. You're just not seeing it reflect in their current asset quality or anything else at this point.
Well, have you seen any notable increases in companies tapping credit lines for precautionary reasons?
We have not. So if you go back before the pandemic, the average draw rate of middle market credit lines was, say, 40% to make it simple. That fell to 35%. It's run around 36%. So you're not seeing people like they did during the first stage of the pandemic 5 years ago. About this time, we saw $70 billion in commercial lending come through in a quarter, which is way outsized compared to what we see. We grew loans 4% year over year. Think of that as $40 billion over a whole year, not $70 billion in a month. And so we haven't seen anything like that. They're calm. They're making money, but they are worried about how all this works and how it can reflect, the changes in supply chain, the changes in costs. Can they pass that through to the customers? But the other thing we have to remember is the U.S. economy is dominated by services too, and those are a little bit different. And
you see that on high end, low end. I guess the question is how much wiggle room there is.
Well, if you think about their credit quality is strong. They still have money in their accounts. They're employed, and the wage growth has been strong. So that all sets up, unless we have more layoffs and more job loss. So what I watch, as I've learned over the years from our team, is I watch the new claims for unemployment, and they're still sitting in the 200 to 230,000 range a week. And that then cycles through, and the continuing claims at 1.8, 1.9, whatever they are, a little bit elevated. And we got to watch that. But right now, you're not seeing that impact. When that happens, the consumer will slow down their spending. And we're seeing it across the board. It has shifted in terms of more experiences, services, less travel on planes, but more travel on boats. And it moves around as it always does. But in the end of the day, it's solid spending at a rate that's consistent with an economy that's grown 2%. It's consistent where it was in 17, 18, 19. It hasn't slowed yet, and I use the word yet because it may if there are more actual job eliminations and reductions and people are unemployed. The unemployment rate's still very strong.
No, I know. And it sounds like everyone expects that, but no one knows how much. You said you'd be worried about the trade war if we get into an area where services are included and not just goods. What do you mean by that? What's the worry here?
Well, we export a lot of services in our country along many dimensions, and you're hearing that more on the European side, who import a lot of our services. It's more of a balanced picture. And will they start introducing taxes on various enterprises to start to as a retaliation? And that you worry about because that could have another impact on America's competitiveness. And so I think people are talking about that. It's not talked about as much because all the tariffs really are on goods today. And it's about bringing the manufacturing jobs back and about U.S. consumption of U.S. goods produced, but U.S. consumption of U.S. service produced is a big part of the economy, and worldwide consumptions of U.S. services produced is a big part of the world economy, and we want to make sure, we as a country should be highly interested in making sure that stays the case.
Well, despite all of this, Brian, the economic uncertainty about what lies ahead, you did, I mentioned the big beat on net interest income, but also maintaining guidance for fourth quarter on this number. And I'm just curious about why. What gives you the sort of confidence and visibility to do that with the rate outlook also changing?
Yeah, so from the last time we gave earnings to this time 3 months ago, we are one cut. Now we're at 4 cuts. Now, one of those cuts is in December. That's not going to affect the fourth quarter much. But if you look across those cuts and think about them, we've absorbed that in better growth. Frankly, deposits perform better than we thought. Basically, as our portfolio repositions, that happens. And it may, that's going from 2% levels to 4% levels. That's going to be lucrative. It may be, if there's 25 basis points of 50, it would be a little bit more lucrative, but it's very lucrative. And so we gave the walk in our earnings presentation. But roughly $1 billion lift from this quarter, completed the first quarter in 3 quarters, is strong growth, and 6 to 7% NII growth is, sort of counter the trend, is how our great company just generates more loans, more deposits, and the repricing of the balance sheet, which extracts the value of those deposits over time, produces that NII growth. So it shouldn't change a lot, but it was less than we thought it would be, but we made up for it with other growth and other things going on.
Yeah, what is that outlook for loan growth at this point? I think you put up some of the best of the group so far.
We have low single-digit loan growth, and that's part just the return on the investments we've made across the last 3 or 4 years, and more loan officers in our middle market and small business area, business banking, we call it, companies up to $25 million in revenue. Those areas have been growing solidly, except for commercial real estate, which has been flat to down. All those areas are growing solidly, and we expect that to continue because we're actually adding new clients. And so these are highly selected credit-worthy clients, but we're adding them because we've added more officers, the quality of our products and services. Frankly, our international understanding, bringing it to middle market clients, our investment banking capabilities brought to middle market clients, all those add to our client reach in the 100 markets we serve in America. And likewise, outside the United States, we've increased our client coverage by a good chunk, and meaning not just the multinationals, companies down to $1 billion in revenue, and that's given us a little more area to play in, and that's resulted in some growth. So we feel very good about the loan growth. If the economy goes into a deep recession, that'd be different. But right now, most people who are even predicting recession are predicting a relatively mild recession towards the end of this year. And our team continues to lower their growth, and we're going from the economy is growing from a 3% growth rate in the third quarter last year to people maybe somewhere between 0 and 1 as we move into the middle part to the end of this year. That's quite a slowdown, but it's still positive, and there ought to be growth for us to get in that regard.
What about investment banking? How has the outlook there changed? There was so much optimism going into the year about deals and IPOs, and that's been sluggish so far. And now with the tariffs, there are questions about what we'll see.
Well, I think at the end of the day, that area, all the areas you mentioned, whether it's tariffs, whether it's the deregulation policy, whether it's the support for manufacturing build-out and things like that, all of which are coming through. And frankly, getting the tax bill extended is important because that sets the U.S. tax rate, which circa 17, 18, 19 was a reason why a lot of companies were coming here, is a big final demand and a certainty of tax rate and ability to make money and keep more of it. That all that going on will help. And so, when you came after the election, there was a lot of enthusiasm and a lot of deals would come through. You saw a lot of deals get announced, and at $1.5 billion investment banking, that's a standard good quarter for us. We would have hoped for more if coming out of the election it slowed down. We've got to get 2 things. If the market stabilizes, then the IPO market can stabilize, and then the high yield financing, I think a deal got done today. We need the markets to have stability to do that. Right now, there's too much fluctuation. That would then add more activity. The M&As, lots of conversations, lots of pipeline, lots of stuff going on. It's just got to have a little certainty to get those deals signed up and through.
Well, that's the question, is when we'll get certainty and how we'll get certainty. Brian, what do you think we need to see from Washington to get that?
Well, I think we need to get the tax bill done, which is the focus is turning that, and we need right now the tariffs and the negotiation delay for 9 days. We just need it to settle out, and so people can understand how that policy is going to work, and then they need to see the outlines of policy sort of burned in and not talked about, but more what is the policy? If it's going to be tariffs, then how do I react to it a year, 2 years, 3 years down the road? Those are the things that they need. And I think over the next, the administration delayed 90 days is negotiating, as this Treasury Secretary and the Commerce Secretary have said on your network, and I've watched them say it. We got to let them do the work. And when they do the work, I think you'll see on the other side of it a reaction to what is as opposed to what could be.
Last week we were all glued to the bond market because Treasury saw their biggest weekly slide since 2001. And some were highlighting the risk of American assets, of the risk premium going up for owning American bonds. And we saw the dollar decline as well. What's your take on that and what we've seen so far in the price action there and any liquidity issues?
Well, I think you saw a lot of movement and a lot of speculation, a lot of debate about whether people were not were selling U.S. Treasuries. We didn't see a lot of that. What we saw is the liquidation of some of the trades and things that you've written about. We've seen relative calmness come back in the market. The gyration of rates has been interesting because at year end to now, there's not a lot of difference. It just went through some pretty good ups and downs. And these are the Treasury markets. They're not supposed to move around like that. So I think, again, it's the same sort of policy clarity it's got to come through that people are trying to figure out that we just spoke about. There's no difference. The bond market's reacting to that and potential impacts on higher inflation for longer because prices go up, or the potential impacts of a constraint in a fiscal situation in the United States due to reducing spending and reducing the economy that way. And so I think longer term, a strong America leading the world on research and development and intellectual capacity, the capitalism of America ought to win out, and that means a strong dollar and a flight to quality. It's just during times when the policy uncertainty happens, you can see that bounce around. The good news is it's settled back down, and we're watching it closely like everybody else is.
You push back on all the negative narratives. I mean, it sounds like you sound relatively calm, and so I guess you're not worried, about that, the U.S. losing reserve status, the stagflationary narrative, the recession. It sounds like you're feeling okay. You just want to see more clarity. Is that an accurate characterization?
I think I don't want to be obdurate here. I'm saying that I'm talking about what you're actually seeing today in terms of consumer spending, in terms of asset quality in our industry, in terms of capital and liquidity, and how we fight through these times. What we're worried about, like everybody else, is the parade of things that could go on and go wrong. But you would assume that people who believe it's their job to make the United States effective may have different strategies than prior administrations. The new administrations had different strategies. But at the end of the day, they are going to make sure that the unemployment is in check, that the United States economy is growing, that the United States is still a beacon to the world in terms of economic power and capitalism, our capital markets, which are the strongest. And so all these policies will have to be settled out at some point against those goals, which are the goals that they're stating. So I think the question is, the bumps in the road getting there, but at the end of the day, you got to believe that for a country that's been around for 250 years, it done a lot of great things. There ought to be a pattern that ought to come out the other side that ought to work.
Brian Moynihan, thank you so much for your time on all the hot topics today. We appreciate it, and on earnings especially.
Thank you, sir.
Thank you very much. Brian Moynihan, Chair and CEO of Bank of America. I think another affirmation, guys, of the positive setup, which we've really received from all the big banks, with no major warning signs or flags as far as cracks in the consumer and credit quality. He even saw 6% loan growth in the quarter. The setup is okay. The question is what comes next, and nobody can really answer that. I think he raised an important risk about a trade war turning into more of a services war, which is a bigger part of our economy, which we haven't necessarily seen happen yet, but the Europeans have threatened that sort of thing. But also some nice affirmation about the action in treasuries, Carl, and not seeing necessarily cracks in the U.S. exceptionalism story or the liquidity story, just the unwind of a lot of trades, which is something the Treasury Secretary attributed it to as well.
Yeah, 4.35 today is a heck of a lot better than
it's calmer.
4.5 plus. That said, trying to regain a little bit of an air pocket this morning. Dow's up 92. Squawk on the Streets back after this.
Bank stocks have bounced off their tariff turbulence lows as earnings have been reported, but are their outlooks good enough to hold upside momentum, or is the recent bounce just a chance to lighten up on those positions? One trader is looking at more downside ahead. He'll lay out the bearish case for one bank in particular. Tune into our Market Navigator segment later on today. Power Lunch, 2 p.m. Eastern Time.
Give beautifully.
Coming up in the next hour, former NEC director during President Trump's first term and former Goldman president Gary Cohn's going to break down how he's navigating some of this market volatility. That's coming up in just a few minutes. Still ahead, it is day 2 of that FTC major antitrust trial against Meta. We'll get a live read from outside the courtroom after a short break.
Download Dave.
Mark Zuckerberg taking the stand for a second day as the FTC's antitrust trial against Meta continues. Eamon Javers is at the courthouse and has the latest for us. Eamon.
Yeah, good morning, David. Mark Zuckerberg's been testifying for about an hour and a half now, and they are going through some of his old emails and internal messages from back in 2011, 2012 timeframe to get to his state of mind as he acquired Instagram for $1 billion. But what's striking about this trial, David, is the degree to which it's taking place really on two levels. On one level, on the surface, you have this idea that this is a regular legal court proceeding, that attorneys are making arguments, the judge is there taking it all in. But on the other deeper and more, maybe more important level, you've got this political overlay here of Mark Zuckerberg's MAGA makeover of recent months, his approach to Donald Trump and reach out to the administration, requesting that Trump get involved here and put an end to this trial, which Trump could do. Trump, however, not agreeing to do that, keeping Zuckerberg very much dangling in the wind here. So this is FTC versus Meta, but you could also say, guys, this is MAGA versus Meta in a very real sense.
Interesting. Okay. Eamon will be watching, of course, and listening to your reporting throughout day two, as we said. Eamon Jabbers outside the courthouse. Shares of French luxury retailer LVMH are under pressure this morning. This after the company reported a 3% drop in its first quarter sales. On its conference call, the company's CFO warned about macro headwinds impacting the U.S. consumer, telling analysts, quote, "We believe on this path there might be, in the most recent week, some impact of demand, given," and there's that word again, of course, that we encounter so often these days, uncertainty. LVMH shares, again, are down rather sharply. You can take a look at sort of the components of what they sell and the declines as well. Wines and spirits, which we know there's a different trend there as well that's impacting, or a trend as well. Fashion and leather goods down 5%. Perfumes and cosmetics are down 1%. Obviously, continued concern about the Chinese consumer, but it goes on from there as well in terms of perhaps some concern around the U.S., given the, again, uncertainty that we're citing.
On the good news front, champagne held up very well. I guess people were stockpiling their champagne ahead of potential tariffs there coming into the U.S. Look, I think part of the problem, David, is they were comping so well a year ago in places like Sephora that it was hard to just lap that. They didn't talk about any, huge fall off in demand, but clearly the market is telling you a story where LVMH market cap is now below Hermes market cap, which is very interesting considering Hermes is one brand. And LVMH is a house of many brands, but I guess internationally exposed, and the brand hasn't held up as well. Or maybe they don't have quite the pricing power that an Hermes have. A lot of people have been talking about that decline.
Yeah, I was at that LVMH store in Midtown, and it was still very crowded.
Oh, with the presence, the box.
The boxes go up to the ceiling.
That is incredible. And they have a new cafe.
No, not that.
That's what I thought you were talking about.
That is not that. That's the new store that they're working on. I'm talking about the temporary store across the street, which is beautiful, and obviously will be there for quite some time. But when it comes to design, they really do know what they're doing. It is magnificent. May not be selling much out of it, though. We'll see. Our live market coverage continues. Don't go anywhere.
for certain.